Oh, it's back to work. It's time to get back to work tonight. Took last night off. I missed you guys last night, but it's back to work tonight, right? Thursday evening. We got a big non-farm Friday session coming tomorrow. There must be some big news on our radar for tomorrow because we got a lot of ranges on the charts. If you know me, if you know my style of trading, I love me some range-bound markets. Lots of great trades, reversal trades, breakout trades I'm tracking for tomorrow. And as always, I'm going to cover all my favorite trades in the video here tonight that we get a game plan to make some money on Friday. Before we jump into the video here tonight, make sure you subscribe to our channel that we don't miss tomorrow night's lesson. And as always, if you guys enjoy the video tonight, if you enjoy this stuff, do me a favor, hit that like button, give me a shout out in the comment section below. Thank you so much for tuning in and supporting here tonight. I missed you guys last night. That's all right. I'm going to make up for it here in tonight's video. Where are the best trades setting up for what might be a really good Friday morning tomorrow in these markets? Again, everything is range bound, right? You can see big ranges, right? Range on the Emini, range on the Nasdaq, range on crude oil. Ranges tell us to use the range as magnets, buy low, sell high, focus on rotation. We're looking for failures, looking for reversals, and maybe some breakouts tomorrow as well. We got a bunch of great, both long side and short side trades I'm tracking across all of these markets. Now, before we go over my favorite trades for Friday, let's all get on the same page because there really are two important, well, maybe three important factors that you won't be aware of for tomorrow. First of all, of course, is the big news coming out at 8:30 Eastern time. Now, it's been a hell of a week, right? It's been a hell of a week. We had that big bloodbath on Tuesday, the FOMC on Wednesday. We just heard from the $3 trillion behemoth earnings out of Apple a few hours ago. It's been a pretty busy week. If you take those out of the equation, this is a huge number tomorrow, right? This, by itself, this is a very big news number tomorrow, and we have to expect markets are going to be waiting overnight for it. Oftentimes, these non-farm payroll numbers, the markets can be a little bit whippy, right, around those numbers. What I usually try to do is let the number come out, let the data come out, let the market tell me what it thinks about it. We're not going to worry about what the actual number is, right? Let the market's reaction tell us here tomorrow. Usually by about 8:45, 9 o'clock, the dust will settle and we'll be able to put together a pretty good game plan to trade on Friday, right? So be aware of that. Now, Fridays, second thing, Fridays, my mindset on a Friday is get into something early and try to leave an open position, a runner, because Fridays, they love to run. They love to just low volume. They love to run. So my mindset on a Friday is always get me into something early, but try to leave a little piece of that position open into lunch, into the afternoon, because again, Fridays love to run. And speaking of love to run, we've got some decent Fed speakers tomorrow, especially James Bullard. We got Lisa Cook. We got James Bullard at 1 o'clock Eastern time. This could be a very good match that lights the fuse for some late session Friday afternoon runs. We heard from the FOMC on Wednesday night, and they definitely tiptoed around the idea that this might be the last rate hike for a while. If you analyzed all their text, which a lot of the news media did over the past 24 hours, they definitely hinted at the idea they might be pausing on their rate hikes. I would imagine a lot of people will be listening to see what Lisa Cook, what James Bullard says regarding that hint of a rate hike pause, and I'm definitely watching for that. I'll be watching for that to be a catalyst tomorrow afternoon. All right, guys? So employment number, be careful overnight. Be careful around that news event. Give it some time to play out, and they'll put the game plan together tomorrow morning. And, of course, Lisa Cook, James Bullard, very, very likely they are going to move these markets tomorrow afternoon. We'll definitely try to get in early, right? Leave something open. As a runner, we always seem to find some good setups on a Friday morning, and I'm excited for that non-farm payroll number tomorrow. Earnings is behind us now. No more earnings to worry about. Earnings season will continue next week, but none of them are going to really be impactful on these markets. So we survived earnings season for the first quarter here. But back to our charts, though, right? Because the money is made on the charts. And, of course, if you like making money, I would definitely make sure you watch all the way through to the end of this video here tonight, tonight because you know me, as every trade I talk about tonight on the video can be applied to your favorite market. So don't just bail on me after your favorite chart. The S&P can be applied to the NASDAQ. The NASDAQ can be applied to the S&P. And I'll definitely bring it all together on the oil later on in the video here. Let's go E-mini first, then NASDAQ, and we'll wrap things up on the black gold, the Texas T here right now. What's the most important factor that we have here on the E-mini S&P? Well, first of all, we are overall bearish right now, and I'm going to put a 60-minute chart linked up in the description of the YouTube video. I always put some higher time frames linked up down in the description. One very important part of the E-mini S&P right now, if you go down the description, you will see a 60-minute chart. We're definitely very bearish, obviously on the chart in front of you and on the 60-minute, but you will notice we are sitting right on the low of a major range. We basically have a lot of support down here on the 60-minute. That is one part of the formula here for tomorrow. Then you can also see the second piece of the puzzle, the second kind of important factor on the chart right now. It's a bear market into a trading range. Now, whenever we have a bear move into a trading range, we basically look to trade the edges, right? The edge bottom and the edge low. Simply put, ranges act like magnets. And so we want to trade the rotation back and forth, right? So as we take out the lows, we look to buy it back up. As we take out the highs, we look to sell it back down, right? We look for reversals basically, right? Breakout failures back and forth. The range tells me look for failures, right? Look for breakout failures, trade that rotation back and forth. And we're going to talk a lot about rotation here tonight because rotation combined with this overall bearish momentum are really some of the most important clues that will help us time the best entries on Friday morning. All right. So my favorite trades on really the S&P and the NASDAQ are going to be reversals off the low, reversals off the high. And we'll talk more about this obviously as we go deeper into the video. We're very bearish right now, right? Overall, very bearish overall. So breakouts are definitely on my radar right now. Again, also on the NASDAQ. But we've got to be careful, right, with the breakouts. We'll talk about some breakout patterns tonight as well. And, you know, obviously, breakouts going higher, right? A breakout going higher, we've got to be careful there too, right? Because even though I love a good breakout, because of the overall bearishness, we got to be careful there. So breakouts are going to be a little more of a sensitive issue here for tomorrow. So what should happen right now, if you're taking my free trading course right now, we talk a lot about triangles. And so you can see right now, get a triangle rotation. We should be going lower, right? See how the market rotates back and forth? The low, the high, the low, the high. We should be rotating back down again. Now, later on in the video, I'm going to talk about if we were to fail on that rotation and why that's a very bullish clue how to trade that, right? But right now, though, let's talk about as we go lower. Okay, there are basically three scenarios you're looking for as we go lower. One is going to be a reversal, right? Now, in my free trading course, I talk about failure patterns. If we take out these lows, and again, on that 60-minute time frame, we're sitting at support, right? Lots of support. Ranges are magnets, right? So I don't want to sell too aggressively down here. What I would love to do is, one of my favorite trades in a range bound market is to trap the sellers in. Now, think about it. We're very bearish overall right now, so I can't be too aggressive trying to buy off this low. This is where what I call a two-try failure pattern. It's a failure pattern, but a different variation of it, like you guys are learning in the free trading course. Think about now the bears coming in, right? Let them try a couple times. We need some sort of fuel, right? Some sort of catalyst to run this thing back up into that range. And this is exactly where one of my failure patterns comes in off of that low. So as we go lower, one of the three scenarios to buy or trade breakouts combine off that trend line, combine off that pendulum swing, right? Combine off some additional level of support. Again, you'll see most of this on that 60-minute chart, but I'd love to trap in some of these bears, right? And then look for that reversal, that failure pattern back up into that trading range. And where do you think the buyers want to go at that point? They're going to want to go to the other side of the range, and they'll want to hold on to the other side of that triangle, right? That's a good example of how we can use leave that runner, right? Leave that runner. Now, another variation of this, oftentimes we'll make that strong run down, and because we're so bearish, they may come over and they may retest that low, right? Happens all the time, right? Strong move down for the bears. We're overall bearish, but again, we're at support, range above us. If we get a retest of that low, it's honestly even better now for the buyers, because now the sellers have taken their profit low, and now we can use what we call a double bottom reversal. These are a little more aggressive, right? Because now they've retested that low. Again, you want to let the bears try twice. Again, we need to use their stops as fuel, and then watch closely. This oftentimes will turn into what's called a failure into a pullback combination. Okay, these are some of the best trades you get in range-bound markets. Now, notice how I do this. Okay, so again, run lower, they retest the low. We trap the bears in as they short into that low. We use their stops as fuel with that failure pattern, right, in the free trading course. And then as we go higher, we're drawing a trend line off the highs. We're going to bring it down to that low, look left, find those prior swings, and this is where you can pretty much use any of the 4 setups I teach in the free trading course. It could be a trap like I'm showing right here. It could be a seller failure pattern below the moving average. It could be a pullback combo. It could be a strength move. As long as that strength move is before the high of that trading range. And again, we're trying to hold on to this thing right up to the highs of the other side of that trading range. All right, guys? So as we go lower, looking for failures off that low, off support, right? And then again, grabbing that new channel and grabbing any of the entry patterns you guys are learning in the free trading course, which reminds me, I know that most of you guys have taken my free classes. You've learned all of these entry setups, all these tactics I'm talking about right now. I love getting all the great screenshots of winning trades from you guys, so keep them coming. They're very inspiring. But listen, if you're here for the first time, if you're one of the few folks who have not taken that free trading course yet, I'll put a link up there for you in the upper right-hand corner. Grab that link. Take that free trading course, because the strategy you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades are going to be that day, and it'll help you start making money on your own with 4 of my favorite entry patterns. You'll learn about failures, traps, pullbacks, strength trades. So if you're tired of missing the best trades right now, if you're not getting the consistent results that you want, hit that link up top there, take that free trading course, and you will learn, well, you will quickly learn why I always say I wish every day was a range day, right? So we're trying to trade that rotation off of that low. Okay, now I've given you guys a couple scenarios off that low. The third scenario, though, is obviously now a breakout, right? Because breakouts will happen. It's a very bearish market right now. There's a lot of jitters around the banking situation, the mini crisis, or whatever you want to call it, the full-blown crisis, right? The banking situation. So this could easily keep going lower. Now, the challenge we have right now is that a range acts like a magnet. And so as we go lower, we really got to be careful selling short down here. A lot of times it'll snap back right up into that trading range. What you want to do is you want to think about 2 types of breakouts going lower, okay? The first one is if we start to accelerate and run lower, okay? If we start to accelerate, as we go lower, you want to be thinking about bull traps, okay? Now we talk about this in that free trading course, right? Trap setups. So as we run lower, if we start to accelerate, right? If the big sell-off here continues and we start breaking down, again, the challenge is we have a lot of support down here, and you'll see this on the 60-minute. The best way to sell in a bear market when you're selling into support is to sell as high as you can, right? That way, as the buyers are coming in, you're able now to protect yourself with what we call a trap setup, right? This course is a bull trap, right? You'll see a lot of examples of these in that free trading course. Okay, so as we go lower, if we begin to accelerate And as I always say, right, if we see a strong move down, if we see a shallow pullback, right, and a lower low in price, right, this is where you start seeing setups for traps. Okay, so trap set up as we go lower. Now, once we get a good distance out of that trading range, now this becomes too low to sell. And then we start looking for a breakout pullback. Okay, these are pretty simple, right? What is support right now gets flipped around into resistance, right? So now imagine now this area now, right, becomes an area of resistance. So we accelerate, right? We get a strong breakdown, strong move, right? Shallow pullback, lower low in price, right? There's our traps on the way down, right? Then we pause. We don't want to short this thing, right, when it gets too far outside of that range. Now look left and go, okay, where were the underbelly, right, kind of the underbelly of that trading range, and that now becomes your objective. Now, if you're an aggressive buyer, you can start to look to pick bottoms on this. These can be difficult to pick a bottom on this because now the range is broken out, right? So you can try to grab a crown reversal, right? One try, two try. We call these crown reversals. They're basically, right, two tries for the bears and a bear trap below the low. A little more advanced tactic. We cover this a lot in the advanced classes in our video course for members, right? Crown reversal. That's how you would pick the bottom on this. But my kind of favorite in this one is now go out, find that new channel. Now watch how I draw it. Draw it off the lows, bring it up around the highs, right? See how I do that? You draw them off the lows because in all reality, that's all you have to work with the time. You think about, okay, where's that prior area right there? Okay, that's where I want to short. Okay, now let those buyers try to grab this thing above the moving average, right? Get back above that 21 moving average. Let the buyers come in, try to buy the pullback and sell right into those stop losses, okay? For an easy run back down to retest the low. Okay, this type of sequence is what you want to be thinking about as we go lower. And remember, right, it's not just a small little punch going lower, right? If we punch our, right, if we dip our toe in the water, right, below this trading range, we are watching to see, do the bears fail? Do they try once? Do they try twice? Remember, higher highs, right? Higher highs, and then buying into those stops, right? Or getting double bottom, right? 1, 2, buying into those stops, right? However, if they punch down and we start rolling, right? We start rolling. Okay, now it's on. Now the best way in the short term is traps. And then as we get lower, we start connecting lows, finding channel highs, thinking about the underbelly of that trading range. Again, if you're a student of mine, you can use a crown reversal, right, to pick that bottom. Just make sure you buy as low as you can with that bear trap, right? Because again, as we go higher now, you have to assume now there's more bears waiting up around the lows, right, of that trading range. We get back above that 21 moving average. We rope the buyers in, trying to get long. It's an overall bear market. There's a chance they might hold this and run back up. But in overall bear market, strong move down. Remember, strong moves are going to want to retest, right? Strong moves down like this, they're going to want to retest. So trap those buyers in, use their stops as fuel, and leave that target back to retest the low, right? So breakouts going lower, bull traps on the way down. Pick your spots wisely, but the option will be a crown reversal off the low, and again, a buyer failure, right? A buyer failure off the channel, off the underbelly. And again, I know I'm covering some different topics here right now. I cover the vast majority of this stuff inside that free trading course if you want to get a deeper dive into failures, traps, how to find channels, and lots of examples in there for you as well. All right, guys? So that's the idea as we go lower. Now, another very important question is, what if we go higher? Okay, if we go higher here, now we have a little bit of a wrinkle, all right, in the plan. For example, right now we have a rotation off the high, basically. Remember, markets love to rotate when they're range bound, right? The amount we go above, the amount we go below, right? We should be looking to rotate back down, all right? If we do not, if we don't get that rotation, if we end up going higher here overnight, that basically tells me we have a failed rotation. That is not a good thing for the bears. Okay, because now what it does is it creates a rising support trend line. It creates a lot of momentum now for the bulls. So can I sell up here? Can I buy up here? That's a really good question. Let's go grab a look at the NASDAQ here. The NASDAQ is very, very similar to the S&P. Again, everything I talk about tonight can pretty much be swapped out right back and forth for the S&P and the NASDAQ. Over on the NQ, we are a bear market into a trading range. We are sitting at quite a bit of support on this 6,000 tick chart, along with on the slower time frame, on the 60-minute. Again, you can see 60-minute charts of this linked up in the description of the video. Same basic game plan, the NASDAQ, right? If we end up going lower, I still look for that to try back up. I look for that breakout, right? Breakout and breakout pullback going lower here. Plenty of reason to think the bears will continue this move down. And as we do that, right, thinking about those traps, thinking about those breakout pullbacks, right? Finding those bigger channels, getting back above the moving average. Again, we talked about this already, right? I'm going to go over this too many times here with you guys because you guys know this already. I just want to make sure you know that the same game plan on the S&P can be applied to the NASDAQ as well, all right? Now, if we go higher here right now, that is that failed rotation, right? That is that failed rotation. You can see I got a channel I've drawn here on the NASDAQ. This is a very convenient channel here, right, for the bears. Let me get rid of that for now, right? You know where it is, but let me get rid of that here for now, and let's talk about kind of some different scenarios here. So the big one right now is, and the same thing for the S&P, is if we don't get, right, if we don't finish off this range rotation, right? If we don't finish off that rotation and we start going higher, the problem is two things. One, we now have quite a bit of bullish momentum. It is overall bearish still, so it's still an overall bear market, but short-term bullish momentum, it just means there's more likelihood this thing keeps going, right? We'll be careful on that. Also, too, there'll be a trend line coming in. Okay, and this trend line can really wreak havoc, right? Because remember, the bears, they want to sell up here, right? They want to take this thing back down to these lows. If that trend line is in their way, all of a sudden they may have to renegotiate the entry. All right, let's talk about this. So clean up the chart up a little bit here. If we end up going higher, and again, this is also for the S&P as well. If we end up going higher here right now, it all depends on what the market looks like as we go. So here's a couple of scenarios. Let's see pop up. And there's very good reason to believe with that channel up here, right? There's very good reason to believe here right now. There is a ton of sellers waiting above this high. Again, everything from the banking crisis, right, to the overall bearishness we're seeing on the 60-minute. Now, ranges act like magnets, right? So it's safe to say this bears up here. There are three scenarios. Really two scenarios. Okay, we'll call it three scenarios. Pardon me on that, right? You want to be ready for, okay? Kind of going over this in my head right now. As we go higher, the kind of ideal scenario is we jump up and we start seeing the buyers try a couple times up here, and we now have the ability to get a good risk-reward ratio for a two-try failure. Now, the reason why you want a two-try failure instead of a regular failure pattern is because of that missed rotation, right? That failed rotation. If we run higher here, we have to assume that means the buyers are being given a chance to run this thing higher, right? That failed rotation is a very big clue. So if we do punch up going higher, I want to be a seller, but that failed rotation, again, both on the S&P and the NASDAQ in this example, it just gives the buyers a lot more confidence to push this thing going higher. I want to let those buyers try a couple times, right? Let them wrap that rope on the neck, and then what I'm going to do is I want to sell short on this. Now, this is where this trend line and this pattern comes into play. So we talk about risk-reward ratio a lot on these videos. If I sell high at resistance above the range, I should be able to risk small, right, to earn large. This equation right here is critical. Okay, because if this gets smaller, for example, a second try, right, or a second example of this, if we were to run higher here, and I want to be a seller back into that range, but now we get something like this. The buyers come in, they try once, because again, they have failed rotation, right? That failed rotation gives the buyers a lot more credibility. So we want to let them try twice in this scenario before we try picking that top. They try once, right? They now try twice. Okay, they pull back once and twice. Now, what is your risk-reward ratio look like? There's the entry, right? There are all the stops now for those buyers. Can I now sell, right? Can I get a small amount of risk for a large amount of reward? Absolutely not, right? It's the opposite. So what do you do in situations like this? And this is where, a bit of experience comes in, right? We're looking for again, what I call a 2-try failure. Trap the buyers in, use those stops as fuel, right, to sell back down into that range. In this situation, though, we have to then look for what I just described as a crown reversal. We have to look for traps. Okay, now traps are, well, we talk about this a lot in the free trading course, right? Traps will be right above a prior swing, and this is kind of the entry pattern you want to see in this situation, right? Because now, what's my risk-reward ratio? My risk-reward ratio now is my risk is here, and my reward is here. A lot more desirable, a lot more attractive, and therefore a lot more people taking it and a lot more likely to make you money tomorrow, right? So this is that variable that we have to play with whenever we have that rising support trend line, okay? Now, another solution on this would be we pop up, the buyers come in, they hold the pullback, right? They retest the high, and then what? The same thing applies, right? Same thing applies, right? Do I get a 1, 2, can I get lucky and get a good, small amount of risk, decent amount of reward? Okay, that's a good trade. But if I end up going something like this where it slips below, right, something like this, see, now we have to go out and look for those traps. Okay, because then risk is here, right? Reward is here. I hope that makes sense, right? We're trying to go back down into that range. I like the idea of selling off the high here, right? Because we're so bearish. Again, there's that big channel coming down overhead. But these rising support trend lines, they can really, they really add another layer of complexity. So just be aware of that. Now, another scenario that you want to kind of think about here. Let's put this back on here again. One more scenario you want to think about is the rotation. So let's say, for example, let's say that we do get that roll lower, right? We do get that failure off the low, and now we rotate back up again. Okay, now we're in the same spot again, right? Same spot, but now think about momentum now. Okay, now the problem is not the trend line anymore. Okay, and again, we're looking to buy off that low, right? Trap those bears in, use the stops as fuel back up. When we end up back around these highs, this is where momentum becomes very, very strong. We oftentimes see these break out, right? That's a pretty bear market right now. We'll look to see if we get a breakout. But if we end up going lower, okay, we get those failures off the low, and we end up punching, running higher. That is a hell of a lot of momentum, and this is where those crown reversals come in handy, right? With all that momentum now going higher, buyers try once, they try twice, and I love those traps, right? These crown reversals off the high. As you can see, there's a common theme here, right? The theme is pretty common. I want to sell at resistance. I want to trap these buyers in, but be aware, if we come off of that low and wind up running higher here, this becomes a lot of momentum for the buyers. So be very careful being too aggressive on that short. Let them try once, let them try twice. And my favorite trade, whenever I'm rotating off the low like this, is to grab some sort of bull trap. Now, this could be a variation of this, right? It could be something like this where it kind of cracks up, grinds down, right? And we're going bear trap like that, right? So if it does, kind of V-top off the high, if it slams up and then slams back down, that trap, right? It's the same basic pattern. It's simply 1 try, 2 try. But again, the key variable here, the one thing I want you to see is, in this situation, we are rotating up off of that low, okay? A lot of momentum now for the buyers in the short term. Still like the idea of being a seller, but again, right, we have to respect that short-term momentum for the buyers here, all right? And then last but not least is, what would it look like to be a breakout going higher? In all reality, if they fail rotation, and this also goes for the S&P as well, if they fail rotation and they blast going higher, you will see on the 60-minute chart, again, they're all linked up in the description of the video here for you tonight, but you will see on the 60-minute, there are some big, juicy ranges right above us right now. And so although we're pretty bearish right now, non-farm payrolls tomorrow. We got Bullard and Cook speaking at 1 o'clock. There's no reason whatsoever. This could easily poke up and keep going, right? Go right back up into those ranges. Again, right now the bears have the edge, but that can change, right? That can easily change. The world we live in is crazy right now. So what would that look like? How would you trade something like that? Well, really, there are two basic types of trades you look for a breakout going higher. One is we take out that high, we hold the pullback, and we jump off that moving average. Okay, now promise me, you're not going to let that first leg fool you. We see a lot of times that first leg is very, very convincing. But then what happens? It fails and rolls back into that trading range. Okay, so it doesn't matter. Remember, it doesn't matter how strong that first leg is. They have to hold that pullback. In most cases, they'll try to hold, and those stops will get hit and will run back into that range again. All right, you're ready for that now with the game plan we talked about tonight. But if they hold the pullback, right, and they really jump off that moving average, now we're effectively ripping that ball out of the hands of the sellers, and we're taking over now for the buyers. Does that make sense? Right? The bears have the ball. When the buyers come in and they hold that pullback, the bulls take the ball, right? Now they've got control. Now they have the benefit of the doubt. Now we get that big range above us. Look for that new channel. Mark off that high. Mark off that low, right? Go out, look left. And my favorite trades, as I talk about in the free trading course, my favorite trades are traps, right? Just below a prior swing, around the low of that channel, or get under the moving average, right? The moving average is where failures live, right? Into pullback combinations, any of the entry patterns, right? You guys are learning in that free video course, right? Trap, failure, pullback setup. Now, again, remember, I'm taking this after they get proof of the breakout, right? 1, 2, jump, right? That breakout now rips control out of the hands of the bears. It gives it now to the buyers. Get a big range up overhead, right? You got, at this point, if we do get that reversal, which again, right now is marginal right now, we'll see if we get it, but 13,271 will be a very likely area for that reversal on the NASDAQ. Over on the S&P, it's a little more dramatic, right? On the S&P, we've got levels at 41.31, 41.43 are more realistic there on the S&P, right? The S&P is the same thing, right? If we run lower, take out that low and then trap in and then pop back up, right? A lot of momentum. If those buyers can hold that pullback and jump, right? Remember, didn't do it here. They haven't done it yet. But if they can hold that pullback and jump, right? That's called those 1, 2, 3 breakout patterns, right? 1, 2, 3 moves we talk about in our trade room. And of course, we mark off that high, we mark off that low, and we start getting after it, right? And finding entries off the low of that channel. All right, guys? Again, these types of slingshot moves can oftentimes lead to big breakouts. But again, don't force them, right? Don't force them. Back to the NASDAQ here right now. One more breakout going higher is a pop and grind breakout, and then we'll go over to the crude oil, make sense of that wild market here for tomorrow. So one last scenario: if we pop up here right now, we pop up, right? We don't pull back to the moving average and jump. No, we don't. For whatever reason, the bears completely disappear and we begin to roll higher. Grind. These are called pop and grinds. Well, I call them pop and grinds. What I do is, when I mark off the high, right, mark off that big low, oftentimes the moving average will be just like this, right? It'll drive you nuts because it won't pull back for you. In these situations, you don't want to chase it, right? Don't buy high. Remember, this could be a failed rotation. It could be a rotation off the low, right? Either way, if it pops up and begins to grind, now all of that momentum suggests we're probably looking for a pullback and a retest of that, right, of that high. I always recommend look left, find some prior swings, get below the moving average for traps, for failures, for pullback combos off that low. All right, guys? So if we do end up, and again, this could be either a failed rotation, it could be a rotation off the low, but if it pops up like this and just starts grinding higher, again, probably going to happen after the news tomorrow morning, right? We'll keep an eye on that little breakout pullback, right? That pop and grind breakout as we go higher. All right. I think I've exhausted. I try to go over as many different scenarios. Remember, it's not a good idea to predict, right? Predicting only gives you 1 or 2 scenarios. I like to brainstorm. That way I've got everything covered, because anybody who's trying to tell you they know what's going to happen tomorrow is either lying to you or they're just simply not experienced enough to know. The markets are pretty unpredictable right now. Game plan plan, go through some scenarios. That way you're ready to make money no matter what the market throws at you. Now, wrapping things up here on the oil. First of all, oil is wild right now, so just be aware, oil is going to be a little more difficult than the SP and the Nasdaq, right? Oil had that big flash crash you can see here. The last time we saw a bit of a flash crash or we had that OPEC cut, what happened was the market had to go basically kind of chopped around sideways, right, for quite some time. So anticipate a range here on the oil unless another piece of drama comes out that really shocks this market. But be careful on oil right now. There are two main components, two main kind of fundamentals on oil. One, of course, is we are very bearish overall on the 4 hour, on the 60-minute. I've got that linked up in the description for you there for the higher time frames. That, of course, contradicts, though, the bullishness into this trading range, right? So we're very bearish. You would think that, obviously ranges act like magnets. So that really gives us a very difficult time if we go lower here. It's very challenging to be a seller as we go lower. We have a strong move down, though. Anytime we see a strong move in one direction, we expect a retest of that level, right? So you know that that bears are going to be trying for that run going lower. This trading range makes it very difficult to sell as we go lower. So what's the best way to make money in a situation like this? Very carefully. This is not an easy situation right now on oil. If we go lower, we're very bearish. So trying to buy, right, off of support levels, I don't hate the idea of being a buyer off that low, but I have to be very much aware that as we go lower, there are probably going to be a lot of bears here who are trying to run this thing down to retest the low. So for me to get a safe long trade off that low, I have to rope those bears in, right? Have them dig their own proverbial grave, if you will, wrap that noose around their neck, and I have to use their stops as fuel with a failure pattern. And again, it has to be a 2-try failure. I wouldn't normally look for a 2-try right there, right? I would normally say we can get pretty aggressive on these because it's bullish into a range. Right? When you're bullish into a range, you can usually get pretty aggressive. Let the bears try once, right, and buy right into their stops. Okay, you can get pretty aggressive in that because, again, it's a pretty bullish move into a range. But it's not a bull market overall, right? So as we go lower, this is where being a little more patient, a little more disciplined, let those bears try a couple times, right? Let them dig their own grave, if you will, and then punch it back up from there. So a 2-try failure off of that low or the double bottom reversal, as I mentioned before, right? That will all work off of that low. If we start to punch going lower and begin to grind down, we know where the market wants to go now. It wants to take out these lows over here, and this is all about traps, right? It's all about traps because we have to get in as high as we possibly can. This is not going to be easy, right? This area right here is not going to be easy. We're going to have to see this thing to punch lower. It'll have to grind down a bit, right? And then probably some sort of trend line off that low, channel there off that high, and try to sell as high as we possibly can because we have to keep that risk-reward ratio, right? The lower it goes, the less desirable that trade becomes because the low that big low, right, at 63, 64, that's the objective. So we need to get enough momentum going lower, right, to give us momentum on our side, but at the same time, we don't want to sell low because we got that low right there, right? A very tricky thread the needle type of trade as we go lower. All right, so be careful on that one. Make sure you've got a very convincing push down and then go looking for traps, okay? As we go higher here, if we go higher, in these situations, in a bullish market, in a bullish move like this into a range, you would think that a breakout pullback will be very likely in a situation like this, but not when you go back and look at the bigger picture. Right? Look at that move down, right? You have to assume there's a ton of bears waiting up here. The challenge, of course, like I mentioned before on the Nasdaq, is if we end up going higher, this is a lot of bullish short-term momentum. And even though I think there's a lot of bears up there, we still want to respect those buyers, let them try a couple times, right? And then use their stops to fuel this turnaround back down into that trading range. Okay. Be aware, though, there'll probably be trend lines off the low here. Be looking for a way to trade around those trend lines here. So as we go higher, be very careful buying it as we go higher here. I know this is a tricky situation, right? Again, bullish into a trading range. A lot of times these will really push higher and be very convincing, right, of that breakout. But look at the bigger picture, a 60-minute chart, 4-hour chart. This is a hell of a move down the last couple of days. We have to assume there are bears up there. So respect the buyers. Let them try a couple times and use those stops as fuel for that run back down into that trading range. That could very much be the best trade of the day tomorrow and really one of the best trades of the week on oil. Profit off at the low of that range, pendulum off the high, and that will give you an idea of where that market could run right late in the day there for tomorrow. All right, so watch that breakout. Be careful with those breakouts going higher. Rope those buyers in. Use stops as fuel with failure patterns, and then profit off below the range. Profit off at support levels below the range, and then potentially from there, 1, 2, right back up again. Right? 2 try failures. Stops as fuel, trading reversals off support and resistance just outside these trading range. That's the name of the game in range-bound markets. Now the game plan's ready to go. Now we wait and see what happens overnight. Again, tomorrow morning, 8:30 Eastern time, non-farm payrolls. Remember, get those trades early. Leave a little piece into lunch. You never know, we might get a little fire, a little afternoon delight tomorrow afternoon with the FOMC announcements or Fed speaker speaking tomorrow afternoon. All right, guys, I'm going to wrap things up here for here. Hope you learned a lot here tonight. I missed you guys last night. Thank you so much for coming back and watching here this evening. We'll see you guys tomorrow morning, bright and early, the trade room. If not, we're going to come back next week and do it again next week for the second week of the month of May. Guys, my name is Joseph. Be well out there. Be nice to each other and be here next time. Adios, amigos. Bye for now.